Welcome, everyone. We're ready to start today's webinar. I'm Zeb Lowe. I'm the Director of Content here at HousingWire, and our topic today is Unlocking the Power of Senior Home Equity, a Blueprint for Success, hosted by Longbridge Financial. And before we get started, we have a few housekeeping items to cover. This is an interactive webinar, so please pay attention to the chat where you'll see links and resources dropped throughout the webinar. We'll be having a Q&A session towards the end of the webinar, and you can submit questions at any time by clicking on the chat. Also, HousingWire will be sending the webinar recording to all registrants later this week. So today, I'm going to be joined by Bill Nolan, the Wholesale Manager at Longbridge Financial, and Adrian Prieto, the SVP of Wholesale and TPA at Longbridge Financial. And so before we get into the meat and potatoes of our webinar and discussion, I'd like to give both Bill and Adrian an opportunity to give you a little bit about their background and let you know how they got to here today. So if we can, let's get started with Bill. Can you share a little bit about your background, Bill?
Yeah, sure. Thanks, Eb. Hello, everybody. My name is Bill Nolan, and I run the wholesale and correspondent channel for Longbridge Financial. And Longbridge only does reverse mortgage, and so that's what I've been focused on for the bulk of the last 14 or 15 years. Has been strictly reverse. Prior to that, I had many decades in lending, generally in wholesale. I came to reverse in 2011, and then joined Longbridge in 2021. And I'm excited to tell everybody about our product today and get people more comfortable with it, and answer hopefully some misconceptions, or clear up some misconceptions, and let people know about the value of this product.
Okay. Adrian?
Thanks, Bill. My name's Adrian Prieto. I'm the Senior Vice President of Wholesale and Third-Party Affiliates at Longbridge Financial. You might be asking, what is third-party affiliates? We have a division dedicated to realtors, builders, financial planners, and also aging-in-place professionals, home modification experts, home contractors, any professional that works with a senior in their home. That's AIP. And these two platforms are dedicated to helping our wholesale partners add value and drive more business in the space. I've been in the space since 2003. I've only known reverse mortgages in the mortgage space. It's a fantastic product. We're excited to be here with HousingWire and Zeb and with Bill to talk about what we believe is a wonderful opportunity, a hidden opportunity that most people are missing in our space, and how can we help you generate revenue?
Excellent. Okay, so let's get started. Our webinar today is going to be more of it's a long form discussion and a kind of a Q&A format. And our attempt today is to answer two big picture questions, and one question kind of begets the other. The first is, one, why should a lender, that could be an IMB, a bank, or a credit union, consider making a fundamental shift to reverse mortgages? And from that question, how does a lender get started? And to kind of get to the core of the answers for both of those questions, I think it's important for all of us to make sure that we understand some fundamental principles about reverse mortgages in the first place, and can kind of give us all on equal footing, I guess. So, Bill, Adrian, can you get everyone kind of caught up to speed on what reverse mortgages actually are? Give us a quick version of the reverse mortgage, or the basics of a reverse mortgage.
Yeah, I'd be happy to. In its simplest form, the reverse mortgage is very similar to any other mortgage that we all know about, any other kind of loan on home, with the distinct difference that with a reverse mortgage, the principal and interest payments are optional. So if a borrower wants to skip a payment, or two payments, or six, or all payments, they can do that. And we find that the reverse mortgage is much more like any other mortgage than it's different. In fact, if you were to have a question about a reverse mortgage, and you were to simply ask the question, well, how's it work in every other loan that I've ever done, any other mortgage that I've ever done, and you apply that to the reverse product, almost every single time you'd be correct. So let's test that out. What happens in the forward business if somebody who doesn't have an escrow in the forward business doesn't pay their taxes and their insurance? Well, bad things would happen. We all know that. If you don't have an escrow, you're going to have, there's going to be trouble. Well, how's that apply to the reverse mortgage? It's exactly the same. So while mortgage payments, or principal and interest payments, are optional, the tax and insurance, important for the people to know, tax, insurance, and other property-related charges are not optional, unless, of course, you have an escrow. And the reverse mortgage does have an option for escrowing those payments for people who either don't qualify not to have an escrow or just opt to have an escrow on for their property taxes. Outside that, the reverse mortgage requires at least one borrower to be 62. The loan to values range from around 30 to 50%, and that's based on what their age is and what prevailing interest rates are. And one of the really nice things about the reverse mortgage is that if I take out a reverse mortgage today, as long as I do three things, as long as I continue to live in the home, as long as I continue to maintain the home, and as long as I continue to make those property charge payments that I'm obligated to make, I can stay there for as long as I wish. If the balance of the reverse mortgage exceeds the value of the property value goes down, the value of the accruals on the reverse mortgage go up, I can still continue to live in that home for the rest of my life without making a payment. And there's a great deal of security that comes with that. In addition, at the end of my life, when both the borrowers, one or however many borrowers are on the loan, when they pass and the home becomes available to the heirs can acquire that property again, regardless of what the accruals are. The heirs can acquire that property for 95% of the value of the property. So there's protections for the borrowers, there's protections for the heirs. And again, it gives a great deal of freedom, a great deal of comfort to people who need that security to know that they can continue to live in their home and have some financial security behind it. So one of the things I want to talk about is occasionally, it's the elephant in the room. Some people think that the reverse mortgage is not a very good product. Most of the time when we run into people who have negative thoughts or negative impressions of the product, they think it's not an ethical product. Our question is always, why do you think that? And we never really get very good answers, because what that opinion comes from is misinformation, or it comes from the way the product was maybe 10 or 15 years ago. Today, there are lots of borrower protections. FHA is firmly behind the home equity conversion mortgage, which is, by the way, about 2/3 of the loans we do are home equity conversion mortgages. The rest are our proprietary mortgages that are designed for borrowers who have a higher property value over the conforming loan limit, the high cost conforming loan limit, and need more cash out than the HECM provides. But FHA is fully supportive of our product. Julia Gordon was at our conference just last week and spoke very highly of the program and the value that it offers to a lot of our borrowers who are getting to the point where they need a product like this.
So Bill, I also wanted to add to Bill's point in terms of qualifying for the product. Bill said 62 years or older, own your primary residence, no investment properties. With our proprietary product, can go as low as 55 years old as an option also. And one of the acronyms I like to qualify a reverse mortgage is APE, APE, age of the borrower, property value, and how much equity in the house. And that way, it kind of helps you determine what that reverse mortgage might look like for that particular borrower. It's like, this is a space, to Bill's point, it's heavily regulated. I would say it's the most regulated mortgage in the industry, forward and reverse. We take a lot of precautions in protecting this particular demographic, which we've learned over the years. There have been some rogue agents out there, LOs, have taken advantage of folks, and that's made for big headlines, which has created this kind of bigger issue when it's really isolated to a handful of loans. We do a lot more business where we help out a lot of families, borrowers, and professional advisors create a safe retirement. And I use retirement is the way I look at a reverse mortgage also. This is a demographic of folks over 62. They're looking to expand and make their retirement durable. Their home property, their home asset typically is their biggest asset. So here's a tool to allow someone to use a mortgage over 62. Like Bill said, payments are optional. That's a big deal. You can make a payment if you want to, or you don't have to make a payment. And this is something that really allows you to create a lot of options and flexibility over time.
Yeah, another thing, if you're looking at it from a traditional purchase LO perspective, that is that on a traditional purchase LO side, I think that if you've got five different scenarios, you've got you need to have perhaps five different loan products, right? To satisfy, you can have five borrowers or five customers that come in, and you need to have this, this catalog or this library of loan products, right? And like, okay, well, this person needs, I need to have all these products. This person needs a VA, this person needs a USDA, this person needs a FHA 203K, this person needs a home style or whatever. And one of the cool things about what you guys are referring to when you say reverse mortgage is the FHA home equity conversion, the HECM, right? And that's like the gold standard of when people talk about reverse mortgages, you're talking about the HECM. And that one product can solve multiple scenarios, right? So it's not that you can originate, or you can have this reverse mortgage, and it can map itself to dozens and dozens and dozens of different scenarios for senior borrowers, and not need this or require this library of multiple products, right? It's one product that has multiple solutions for various types of borrowers across the spectrums, including purchases, refinance you can refinance a reverse mortgage on top of a refi, right?
Right, and there's a lot of that's a good point. There's a lot of payment options, right? You can do a lump sum, you can do a 10-year payment, you could do a term payment, you could do a combination of all of those three. It really depends on what the borrower's needs are. So, like you said, a lot of flexibility, but everything is really driven with that FHA insured HECM product. All the major lenders in our space offer basically the same product. There might be some slight overlays on guidelines, but we're offering the same product. Where you might see some differences is the proprietary jumbo reverse mortgage market, where there might be some differences on rate and a couple of features here and there, but the nature of the product itself is pretty much the same.
Okay. Well, let's talk about the borrower market. Can you guys speak to what's happening in the older borrower market?
Yeah, so I think everybody knows that, the American population is aging. I'm not going to surprise anybody with that. But we hear in our industry, we talk about 11,000 people turning 11,000 people every day turning 65. So our population is definitely aging, and with that, these borrowers have they're at a different point in their lives. So as the graphic shows, a lot of people are reaching that age, and needing a mortgage, needing some sort of mortgage solution, but unfortunately being declined at a higher rate. So what's happening with these people? They're going to be, into their 60s or maybe into their 70s, and they don't necessarily have the resources that they'd hope they'd have. They maybe somebody had to leave work early to care for a spouse. Maybe somebody themselves, maybe they became unhealthy. So that's a good point for loan officers to look at those borrowers and say, is a 30-year mortgage, is refinancing into a 30-year mortgage, or is a HELOC really the best product for them, depending on the resources they have? In many cases, these people are, they have a relatively fixed income. Maybe they get a little bit of cost of living from Social Security. Maybe they have a pension, but the assets they've accumulated over their lives, that probably is not going to continue to grow. So adding one more payment may not be the right solution. The other thing we look at all the time in our business is as people age, and you don't think about this until you get up there in life, is you realize the house you live in may not be suitable for aging. So is the laundry in the basement? And is the bedroom upstairs? Is it just not in the community that you want to be in? Did your kids move to a different community, and did they have grandchildren? Do you want to try to follow those kids? We see a massive move to different parts of the country by people. And the reverse for purchase can be a really amazing tool to help people afford all those things. So if I want to relocate, the reverse mortgage is a great tool for that. Let's say I need to repair a roof. It's been 25 years, my roof is maybe starting to leak. Well, do I have the resources to make that repair? In many cases, people are going and they're getting a home equity line of credit. And that may not be the best product for them. Again, they're just adding one more payment. But what if we could show them a way to get that roof repaired, make the modifications to the home they need, and have more resources to live out their lives and to do the things that they've really always wanted to do?
Yeah, I'll add to the this demographic market. And we've thrown these numbers about 11 to 12 trillion with a T in senior home equity that's been untapped. It's sitting there. And all these things that Bill just outlined, these case uses, whether it's home modification or just improving your lifestyle, paying for medications, helping a grandchild with tuition, uh, it's this untapped equity that we're trying to position with a lot of the forward market to take advantage of because there's a huge need there, but the message is not being received by this demographic yet. And if we can get the forward, our forward audience on this call and the forward lenders to look at this a lot more seriously, and we could provide the resources and that blueprint to make it happen, I think you can see a big difference because we do have a retirement crisis, and I think this is one solution to it.
Yeah, one thing that I saw this was a year or two when I was looking into some of this stuff. And it was also the difference between the generations. There were the generations that the first reverse mortgages were actually created for versus the reverse mortgages that are being offered to the current generations now, and the boomers now that the reverse mortgages are being offered to, and the people that are retiring now, their psychology or their mindset is one that is very different than the original reverse mortgages are being offered to, and theirs is one of lifestyle. They want to sustain the same lifestyle that they have while working. You know, they're not looking to drop. They're not expecting to drop or to reduce their their lifestyle in retirement. They want to the same or go one step above in retirement.
Yeah, that's a good point. About 20 years ago, the profile of a reverse mortgage borrower was typically a widow in their mid-70s on a fixed income. That was more or less our market roughly 20 years ago. Now with this new boomer, like these boomer generation, like to your point, they're used to debt, they understand debt, they like to leverage debt, but now as they enter retirement, they're probably going to keep on refinancing to unlock that equity, but they don't realize that reverse is a great product to do that too, right? So it's just a matter of introducing just a new option. They're used to managing debt almost their entire life. Why not do it now? I think the older generation might just look at this a little bit differently, right?
Yeah.
That silent generation of the way they manage their assets and debt's bad and all that. But now the reality is you have to learn how to manage debt in order to really kind of stretch out your retirement.
Right. So
and a lot of these borrowers, it's not that they didn't plan. It's just that things happen. I mean, look at what's happened. I mean, kids, you send kids to school. That is a drain. Again, health concerns, that causes people to retire early. It makes for additional costs. Things happen that can't be planned for. And so people many times are in a situation where they didn't end up where they wanted to be. And it can be unfortunate. And the sad, really sad, and from my view anyway, the really sad part about that is we have this wonderful product that can really do a tremendous amount. It can change people's lives. It literally can change people's lives, but they don't know about it because it's not presented to them. Because they come and they say, "Hey, I need to move. I need help with my home. I need help with my finances. I need to pay off debt." And they're offered a 30-year mortgage, a 15-year mortgage, maybe a home equity line of credit, maybe a second mortgage, but the reverse mortgage never comes into play because forward originators typically are a little bit blind to it, frankly. They don't understand it. They don't get it. That's if they don't even kind of suspect that it's not necessarily a good product. Your forward loaners many times say, "Well, I hear that's not a very good product, or I hear it's too expensive." Nothing can be further from the truth. This is a fantastic product. It's affordable. It's available. It's a life-changing product, and we'd love nothing more than for every borrower who's age and equity qualified to at least have this as an option. Be able to say, this is the other thing you could do in addition to your other choices here, like you mentioned, Zeb, all the things that they have available to them, also offer them the reverse mortgage.
So what does this mean for the lending industry?
Sorry, what was the question?
So what does this mean for the lending industry?
Well, there's a huge opportunity, and if we could move to the next slide. One of the things that we did in 2023 is we pulled Home Mortgage Disclosure Act data for all lenders in the United States And we were able to look at this as in context of age and equity qualified borrowers. And we said, first of all, let's look at the borrowers who went seeking a loan. What did those people look like? And what happened to them? Well, in many cases, the borrowers were declined. And 119,000 borrowers were told that they didn't qualify for the loan they were seeking. Now, maybe they went and got a different loan. Maybe they went to a credit union and qualified. Maybe they went to a hard money loan. Who knows what they did? But what we do know is independent mortgage bankers, banks and credit unions turn these borrowers away. And the other notable thing that we pulled out of the HMDA data is that the biggest reason for the declines were debt ratio. So of these 119,000 borrowers, how many of them could we have, 116,000 borrowers, how many of them could we have helped if they'd been offered as a counteroffer, instead of saying, sorry, we can't help you at all? What if we counteroffered them and said, by the way, you don't qualify for that loan that you applied for, but look, maybe this is a better product for you and you may or may not qualify, but there's a much better chance of you qualifying because our debt ratio requirements are so much easier. Our credit requirements are so much easier. Again, we're just trying to make sure that they can pay their property charges. So if all of those 116,000 borrowers were counteroffered, all those declined borrowers that we conceivably didn't help in one form or another, if all of those were given a counteroffer, and only 25% of those borrowers, remember again, most of them declined for debt ratio. If only 25% accepted that loan, and we estimated 70% of the available proceeds, and we applied a very reasonable net profit margin, the mortgage industry would have made $194 million in more revenue. So there's a massive opportunity not only to help borrowers, but also to help mortgage lenders who could probably use an extra few loans and some additional revenue. Now, one other thing that's not on this slide that I will say is that we also looked at borrowers who did get a loan, who they did approve for some loan. Again, we don't always know what kind of loan from the data, but it's either a fixed loan or it's a HELOC. And these borrowers, we looked at everybody that was age and equity qualified. That number is 3 times this number. So again, this is a group who is in their 60s looking at retirement. We're giving them a payment. We're giving them another payment. So then we looked at one more data point on those 380,000, almost 400,000 borrowers who got a loan, even though they're age and equity qualified for reverse. And over 50% of those borrowers had a debt ratio of 36% or greater. So I don't have to tell people in the lending industry, if you have a debt ratio in the 30s, in the high 30s, in the 40s, you're probably not that comfortable. It's not like you're living a lavish lifestyle. You probably may have, depending on where you're at in that spectrum, you may have a hard time paying your bills. You may compromise on not doing some things that you really like to do. Now, here's a study. I can provide the study. It was done by Harvard, and they showed that the month that a senior borrower paid off their mortgage, that very next month they increased their pharmaceutical spend by 25%. Now, that's not a little bit of a disturbing statistic. I don't know what is, because what it says is before, when they're making that mortgage payment, they were literally cutting pills. They will do almost anything. Senior borrowers will almost do anything to make that mortgage payment, because what do they do if they can't make their mortgage payment? What's their alternative? It does not look good. So again, we like to say, if these borrowers were offered, in addition to the loan they got, offered a reverse mortgage, many of them would be in a better situation. And certainly the lenders would be in a better situation as well.
Yeah. And I think there's a revenue opportunity for forward lenders to hedge their portfolio with, even if it's a small percentage with reverse mortgages committed to it, they're hedging, and I think they're creating another revenue stream by addressing this market where we've done a lot of research at Longbridge. All this data that Bill just showed you is all, you can get, it's publicly available, but we've put the resources to actually package it, and we could present it to you. If you're a forward lender on this call, we could present this data to you specific to your portfolio and explain to you what is your exact opportunity that you missed the last couple of years, and how can we help you, take advantage of it for your client base. So it's something different ways where we want to address the borrowers to help them out. At the same time, there's a revenue opportunity. So both paths make sense for everybody.
That was actually going to be my next question. If you kind of unpack the what that looks like for the lending industry, but I was going to ask you if you could unpack a little bit what that looks like, the value to lenders individually. If you could unpack that just briefly.
Yeah. So one of the things that, of course, I think there's a value in really truly being the lender for life for these borrowers. Which we gave them their first loan that they used to buy a home. We helped them refinance several times as rates went down over the last 20 years, 20, 30 years. We probably helped them with a home equity line of credit. The lending industry helped them with a home equity line of credit along the way. And now this is the last, one of the final stages, and this may be the last loan they ever really need. So that's doing the right thing for the borrowers, number one. But at the same time, when a lender begins to become known as a lender that does reverse mortgages, they get those loans that other lenders may have overlooked, or maybe the credit union again refers out. Maybe they can refer out if they decide they don't want to do a reverse mortgage. They can refer them out to their local IMB so that they can help them get a reverse mortgage. We have a couple of large servicers. In addition, we have a couple large servicers who have aggressively pursued their MSR book. Very targeted, and they're looking to improve the overall value of their MSRs by offering the reverse mortgage to borrowers who maybe it's a legacy borrower who is a smaller loan. It's starting to advertise way down, and it just doesn't have the value that other loans in their MSR book might. I also think about some of those borrowers who are chronically late, and maybe that's an indication of a payment default, or those borrowers who are defaulting. A lot of times we can help borrowers who are starting to default, early stages of default, or even late stages of default, as long as we're doing an escrow. So we make sure the tax and insurance are paid. But I also think about, I know there's not a lot, but think about the borrower who got a loan sometime in the past and did not refinance between March or April 2020 and June of 22. So they do not have the 3 or 2.5% rate. They have the old rate, 5, 6. Why is that? Were they just too lazy? Maybe, but I have a feeling that many of those people just didn't qualify at the time. And their home has appreciated. They're still sitting on a 5 or 6% rate, or whatever the rate was that they got, and they have an opportunity to do this product. Where if they did apply for a refinance during the refinance boom, they didn't get it. So there's another opportunity there. And by the way, when we talk to forward lenders, we often like to point out that when we do a refinance into a reverse mortgage, about 80% of the time we're paying off a loan that's sitting in someone's MSR. So I would rather that the people who own those MSRs did those loans. We can help, and we'd love to be a part of that.
Can you explain the concept of centralization and why that is probably the best option for forward originators?
Yeah, while I tried to make the reverse mortgage seem like a pretty simple product, we try to make it simple in the borrower's eyes, and it can be very simple in the borrower's eyes. But the fact is that from a back office standpoint and from a borrower engagement standpoint, it's really very different than any other loan that the industry does. And so when I say centralization, it's really what we're saying is you need somebody within your four walls that understands the product, that understands the fundamentals, how it works, how to deliver it to the borrower, how to identify borrowers that are qualified for this and should be presented with the product as an alternative. Somebody that understands that and ideally only does reverse. We have 12, if you look up the Scotsman top 20 lenders for 2023, 12 of those are significantly invested in the reverse mortgage channel. And what that means is they brought somebody in that knew the product before they hired them, or they trained somebody internally that knows the fundamentals of the product, has been an originator, understands what it's like to sit at a kitchen table with somebody, understands what it's like to have the objections and to explain clearly to these borrowers what the value of the product is and how it works. And more importantly, not more importantly, but equally important, this reverse mortgage manager, one of the key responsibilities is to make sure that it doesn't get forgotten, because it's so easy. Loan originators are in a hurry. They're moving quick. They're trying to make money. They're doing a lot of things, and they tend to forget that the reverse mortgage is an option for a lot of these borrowers. And if they don't forget, they don't identify them as the age and equity qualified borrowers they are. So when we say centralization, we're saying bring somebody in to keep this product on the forefront of the originator's minds, and to help them when they get a loan, to help them bring that loan and get it from origination to funding as quickly as possible for that borrower.
We've come across organizations that try like a decentralized approach, which is they'll have multiple retail branches and they'll just allow the retail branches to do reverse here and there. And it's, I think I understand the trying to create autonomy with the branches in the forward space, but I think for purposes of reverse, you're better off, as Bill said, having one point of contact for training purposes, for marketing purposes, for kind of being the expert in that distribution network that understands a product. And in our experience working with a lot of LOs over the past several years, not every top producer is cut out on the forward side to be a reverse LO. I think, as we were talking about this before, in the forward side, you've got a lot of the transactional, fast pace sales cycle, and in reverse, it's a very slower pace. It's very consultative, and you need that type of person to actually, in my opinion, to actually help you centralize and run your reverse mortgage division. So there's a lot of different qualities that you have to take into account. And by the way, if you're looking to take this and centralize it as a forward lender, Bill and I, through our network at Longbridge, we always try to refer quality people that are looking to step into those type of roles.
Yeah, and the data really bears this out. When we have, again, 12 of the top 20 Scotsman Guide lenders in 2023 have made a fundamental move into the product. And we look at what is their volume of reverse compared to the opportunities they have for age and equity qualified borrowers. And the data supports that more loans are made, more borrowers are helped by a significant number. And that's what this graphic is showing. The top 4 lenders, we took the names out, even though they're publicly available. We don't want to call anybody out, but the top lenders A through D are all centralized. They have a reverse mortgage manager, again, keeping at the forefront of the mind, helping with marketing, helping with training. They do a lot more loans. They're helping a lot more borrowers, and they're generating a lot of revenue from these reverse mortgages. The last 2, E and F, are basically companies that just say, we have the product, loan officer, feel free to broker it out whenever you find a loan. And we just know that the data shows that doesn't work very well. Those loans just aren't made. Borrowers are not presented with the product.
I think the most immediate impact for someone with the resources and the servicing portfolio, the MSRs that Bill was talking about before, we've had a couple of examples the last couple of years where forward lender servicing portfolio leaned on us for training, for some marketing to prospect in their MSR book. And within a couple of months, they were ramping up volume pretty quickly with okay marketing, I think, in our opinion. They had a small call center, but it was gradually increasing. And then we have another group, very big brand name on the forward side. You'd be surprised if I mention them. And they kick-started a call center by looking at all their forward rejected loans based on debt to income. And that's been a huge windfall for them to take those type of leads, have a reverse mortgage team of LOs, a handful, 3 or 4, focus on scripting, converting, and they've been generating double digits month over month with us, just based on that basic approach, because they have the client base, they have a servicing portfolio, they have all these forward loans that, the numbers don't work on the forward side. So why not revisit those numbers and convert that to reverse? And it's a huge opportunity.
And actually, if we could go back a couple slides, I don't know if you can do that, Zeb. If you go back to the slide, let me look at it. Which one is it? It's slide 5. This is, again, we just called it Mortgage Company X. And what this is, again, it's just HMDA data. And we looked at the number of loans that were made to age and equity qualified borrowers by this company. They made the second number, 2,025 loans, not reverse mortgage loans, 2,025 traditional loans were made to age and equity qualified borrowers. And if you look at the graphic part just below that, 66% had that debt ratio of 36% or more. Again, would those borrowers have been better off with a loan where payments were optional? My bet is yes, that many of those borrowers would have said, that sounds really good. I could use the extra income. I could use the lower payment. I could use the cash, whatever they need the reverse mortgage for. So again, we did a couple of these. You'll see these in the deck. There's another one as well. It's Mortgage Company Y, a little bit smaller company. And as the saying goes, your mileage may vary. But we're happy to give you this data for your specific company. Contact me or Adrian, and we can shoot you the same graphic. I can pull up just about any company that provides Home Mortgage Disclosure Act data, and we can help you look at yours and see how much is there. And if the numbers are small, that doesn't mean it's not a viable product. It just means you don't have a lot of age and equity qualified borrowers, or maybe you're helping those borrowers already.
All right, so I think we answered kind of the first of our big questions. The second part of our big two questions for our conversation today was kind of how to get started, or the steps that a lender might take. So how do lenders like Longbridge, how do lenders make it easy to create this new channel for their business?
Yeah, we like to see this as we'll meet you where you are. If you want to just get in on that broker level and you just want to start from the basics and turn it over to your team and let them originate, we can help. We do a lot of that, and it's called our Reverse Made Easy channel. And what we do there is we become your expert. We'll help your loan officers. We'll help guide them. We'll kind of walk them through how to take an application. We do a lot of training. We have a tremendous volume of training that we can help loan officers with, and we'll help them get from point A to, we'll help them take the loan all the way through. We order services on your behalf. We'll order, we'll suggest what documents. We'll even contact the borrower as necessary from our processing team. So that's a Reverse Made Easy team. We do a lot of loans that way because a lot of times people just want to do that one transaction. But as you go to the crawl, walk, run, the next day is brokering, and that's where, just like any brokered loan, you originate it, send it to us, you process it, you send it to us, we'll underwrite it, we'll close it, we'll fund it, and then there is a non-delegated correspondent channel in the FHA world. It's called Principal Authorized Agent, which many people may be familiar with, but that's a big channel for us. A lot of loans are done on that, and it's a situation where it leaves the originating lender, they don't have to underwrite the loan. They don't even have to close the loan. So we get a file submitted, we'll underwrite it, we'll close it on your behalf. You fund it on your warehouse line, and then we buy that loan. That's a very popular product for a lot of IMBs. And then there's full delegated correspondent when a lender really starts to grow. A couple of the 12 out of the 20 that I mentioned, several of those have moved to full correspondent over the years. We say that you need about 50 units in order to kind of justify the additional cost in that. But as you move from on this slide, you move from kind of left to right, you increase your risk, you increase your responsibility, you also increase your revenue significantly. So wherever a lender wants to engage us, we're happy to help. We're very good at all of these channels, and we have a great team, and we really try to make sure that things go as smoothly as possible.
And we're not, regardless of how big you are on the forward side, if you just want to, dip your toe in, let's say, a smaller part, being a broker, not a problem. Like, you could be a broker and know absolutely nothing about reverse mortgages, that Reverse Made Easy division. Like Bill was saying, we will hold your hand from soup to nuts, do everything for you. And then as you get more and more comfortable with the product, then you start kind of graduating to that next level principal agent, then down the line close. And we've seen this over a span of a few years. Lenders come into the space, understand it, leverage our training, work closely with our account executive team, and then start building over time, because we want to make sure that you guys succeed. And some partners, they just get it right off the bat. They dive head first, and they're off to the races within 6 months, and that's great. Also, it really comes down to your risk appetite and how much do you want to commit to it. So we are there for every flavor that goes.
And do you have any more? Is there any more information on Longbridge about your jumbo reverses and your reverse only divisions, the aggregation? of your
We
third party?
are we are the we are the largest aggregator of reverse mortgages. It's all we do. We are a servicer. I do see a question. Once we acquire a loan, it stays with our servicing for the life of that loan. We have a service by a sub-servicer, but we do have a very involved servicing oversight team. One of the things our CEO is very passionate about is taking care of these borrowers. I think we service somewhere between 40 and 50,000 borrowers today in the reverse mortgage channel and at Longbridge. And so far, since Longbridge started servicing loans about 15 years ago, only 20 loans have gone to tax or insurance default, which is really amazing because we work really hard. First of all, we have the credit income rights, so we get the loan right in the first place. Secondly, we're very intensely passionate about ensuring that these borrowers do get to stay in their home, because that's why we're here. We want people to stay in their homes. And so, that's a really great statistic that we love to quote because it's so powerful. When people say negative things about the product, we say, this is exactly the reason why it's so powerful. It's because we do help people stay in their homes for the rest of their lives.
Yeah, and we're all, like Bill said, we're only reverse only. We do not do any forward loans, no non-QM, just strictly reverse. The HECM product, the proprietary jumbo. What I mentioned earlier in the call was our third-party affiliates. I think I saw some questions about working with realtors and financial planners and agent in place. And so we work very hard in our space to train loan officers about working with realtors and builders and how do we create an opportunity and address a specific borrower situation where, let's say we have someone who's looking to relocate or right size their property. We call it HECM for purchase. So they can sell their property, right size to another property, optional payments in an property, actually have money put aside from the sale of their first property to put in the bank or with an advisor, but then just kind of tailor what that new property is to their lifestyle at that point in time. Every time you talk to a realtor about this and they get it, they're like, this is like the best product. Can I poke holes in it? And there's no holes to poke in it. The problem is no one knows about it. and it's insulated within our reverse mortgage space. So we have a lot of national calls and trainings, Seb, with our network. In fact, this month at Longbridge, we're doing one specifically about should I stay, should I go on HECM for purchase with a clients, and all the realtors and builders, we invite them. We're trying to help the LOs add value, not just push product and price, but what can we provide an LO to help build their business? And that, that whole kind of overall package is what we're trying to present to a forward lender in general. And I think the point of our call today is blueprint for reverse mortgages. We're trying to create an opportunity, a complete picture for a forward lender to really take this product seriously, and we can have a conversation with them and answer questions, trying to figure out what we can or can't do.
All right, Bill, Adrian, thank you for sharing all of this. Before we run out of time today, I'd like to jump into a few questions. And those of you in attendance, remember you can still send questions by clicking on the Q&A icon at the top of your screen. I've got a few lined up though. And the first one I think that would be best to tackle would be about the HMDA data. Question is, I would like to see the lender data for my organization. How can I get the HMDA data you discussed?
Yeah, happy to provide that for you. If you send me or Adrian an email and just say, hey, can you give us the name of your company, any DBAs in case we have a hard time looking it up, we can have banks, credit unions, IMBs, shoot them over to us and we'll respond as quickly as we can with the same roughly the same graphic you saw for those company X and company Y.
Okay, and on that note, we're going to be sharing the presentation, and Bill and Adrian's contact information, phone number, email is there, so you can contact them that way.
Yeah, and Seb, I'll also plug that saying the deck too. We're also going to be MBA National in Denver in a few weeks. So if anybody on our call is going to be MBA, Bill and myself, our CEO Chris Mayer, our COO Bill Packer, and Melissa Maceredo, our co-partner, will be there. So we're there to sit down and listen to and answer questions kind of based on our call today.
Good. Okay, we have another question. What is your relationship with regional or local HUD housing counseling agencies that offer reverse mortgage or HECM mortgage counseling?
Every borrower that gets a loan from Longbridge and every HECM borrower must be counseled. And we we were completely independent of who that borrower picks. And that's one of the things, again, I talked a lot about the protections, and Adrian talked about how it's a regulated industry, but every borrower, before they can get a reverse mortgage, whether it's a HECM or a proprietary loan, they have to go through counseling, and those are all done by a HUD counselor. We give them a list. We say, pick one, call them. We don't want any influence on who they pick or who they call. And so they do that. They go through, I think it's about an hour and a half counseling session, so that they're fully informed of all the nuance of the product before they move forward.
And if they can't afford that, there's assistance for that as well now, right?
There is. It comes and goes each year with the funding, but yeah, there's typically some assistance available for that.
Yep. Okay. The next question, how can a realtor market to individuals who could be helped by this great product? So many individuals feel as though they cannot sell and purchase another home that is far from the truth. How can a realtor market to individuals who could be helped by this product?
Well, as I understand this quote unquote mortgage rate lockdown is, I say, well, I can't afford to move. I would love to move, but I can't, because I have a 3.5% or a 3 or 2.5% mortgage rate. And so if I move to wherever I want to move, now I have a 5 or a 6 or whatever the prevailing interest rates are, and my payment goes way up. Well, if you think about what we've talked about, this is a very, very good solution to that very problem, where they can do exactly what they want to do. And they can move to a new home. They can get the home that even if maybe they say, well, I have, my equity is, $500,000. I want to buy a $500,000 house. Well, now they can buy $750,000 or $800,000. If they're buying a new home, they can upgrade. And by the way, that's a great tool for your realtors as you're talking to realtors, is to, and your borrowers is, you don't have to only buy the home that you have the cash for. You can buy more home. You can buy exactly where you want to be, in the community you want to be. And so that's a really nice tool to offer for somebody that's relocating. A lot of our originators originate through realtors. They get a lot of refinances through that strategy, because the realtors say, oh, well, I don't have anybody that's moving, but I do know somebody that could really benefit from refinancing this product. So I recommend, if you're a loan officer, I would talk to every realtor about the product. If you are a realtor, I would talk to all your agent equity qualified borrowers. I would talk to them about the options.
And we have Rob Cooper is our national sales leader for HECM for Purchase and Builder for the country. He's got 10 years of experience. That's all he does. He specializes in talking to realtors, training realtors and builders about this solution. So if you're interested, please, I think you have our contact information. We could put you in contact with either directly with Rob Cooper, or we could provide you a lot of different training resources and collateral that you can utilize, or you can join one of our webinars. We have plenty to do every month.
And there's also a subset of realtors, or it's like a realtor certification. I'm going out on a limb.
Yeah.
But it's for the deal specifically with seniors only.
Yes, I think it's SRES is a designation. Yeah, right. I mean, these realtors specialize with this demographic. Absolutely. Yep.
Right, exactly. And then the vocabulary that goes along, like right sizing homes.
Yep.
Homes with the wheelchair accessible tubs and wider doorways, wider hallways, all of that stuff is opening up a whole new like subsection of the housing industry, really, that is
right
and growing.
Absolutely. And I think if you take the reverse mortgage as the main tool, and then if you have a borrower in their house, if they want to stay in their house, because most seniors don't want to move, they like staying where they've been the last 40 years, they'll live there till they die. Great. Then let us do home modifications. Let's make that home safe for them to live in, whether it's a lot of different things that's good, that caters to their lifestyle. If they don't want to stay there, then right size to a different property. So, and then that includes, the transaction circle of professional advisors is, you've got the realtor involved to help out with a possible option of selling the home or right sizing. You've got a financial planner helping maybe perhaps with the finances to make sure everything's in line. You have an accountant possibly. You have an agent in place specialist, a home modification expert to help out. If as an LO, everybody has a great network of professional advisors. So with that professional advisor network, for anybody over 62, the reverse mortgage should always be part of the conversation to kind of figure out, how does it fit into this particular scenario to solve that problem, or what might be something they need.
Another question that we've got, can you go more into the borrower costs, the different types of reverse mortgages, the qualification expectations. We covered some of that. We get how great this program can be for those over 62, but how does an LO pencil what a reverse mortgage looks like for a senior homeowner or home purchaser? How does an LO pencil what? I guess what they're asking maybe is like a reverse mortgage calculator. How would you estimate? How would you map? I guess what I was talking about earlier, maybe the scenarios. How do you figure the solution for these problems? For how reverse mortgage solves these solutions or solves these
We
problems?
have just a wealth of tools for that. And if anybody would like, if there's a company's already approved with this, they have access to all the training. We have calculators. We have our origination system for reverse is a off the shelf. It's one that about 80% of the industry uses. So we can kind of demonstrate what it's like. We can also help with what we call proposals. They kind of map out what's the value of the home, what interest rates look like, what are the liens, what are the costs. We can help map out all of that if there's an interested borrower. But yeah, just contact us. We'd happy to set you up with all the training that's needed and all the marketing as well, and help walk you through your first one.
The product is very nuanced. So, we talked earlier before, if you're 62 and older, own that prime residence, I would argue the reverse mortgage beats any mortgage product out there. So if you got a client over 62, you should be talking to us about that solution and figuring out the tools, but it's nuanced. There's a lot of, it's different from Ford products. And Zeb, you were on like 5 different products in the Ford side. It's just a few. The reverse is very layered. And so we encourage you to talk to one of our account executives to walk you through, give them a scenario or her a scenario, and they'll walk you through because there's a lot of different things to be aware of, everything from the counseling, the application, and the overall process from start to finish. And once you get one done, then you'll start feeling like, it's the next 2 or 3 are a lot easier. But we don't want you to be intimidated by that. I think it's simple to qualify, but then once you got a deal in the door, let us help you kind of like structure the deal.
Okay. I think we got time. Just one last question here. Does the mortgage loan servicer change more often than not with these loans? Older individuals tend to be sensitive regarding this issue.
When we fund a loan, it never changes. When we acquire a loan, we board it into our servicing. If we acquire a loan from a full closed loan seller, we board it to our servicing immediately. There's a couple companies that will board it to their own servicing and then transfer it to us. But at the end of the day, most servicing ends up in really 2 places. Master serviced by maybe 5 different companies master service in our business. So no, it doesn't change, and we're not in the habit of selling. I don't think Longbridge has ever sold any service.
No, we never have. No.
So the answer is no. We don't change. We keep it the same, and again, we work really hard to make sure the borrowers know what's expected of them, and they get they're very satisfied with their experience post funding. That is really important to us.
The servicing aspect is super important for us. I think Bill brought up that we've only had 2 defaults. Besides our sub-servicer we deal with in the space that specializes in reverse mortgage servicing, we have a team out of Houston that runs our servicing portfolio that helps be proactive in talking to borrowers every month, answering questions, working with them. So in addition to our sub-servicer, we've got another dedicated servicing team. All they do is help our borrowers out once we close and fund these loans. So it's very specialized because it's a specific demographic we're talking to. And our team is just trained on that. So we take a lot of pride in our servicing, by the way, if that didn't come across it.
Good. Well, Bill, Adrian, thank you for joining us today. I really enjoyed this conversation. And this is the end of our webinar. I want to thank our panelists and you, our attendees. If you submitted a question that the panel didn't have time to answer, we will contact you directly to answer your question. HousingWire will be sending out the webinar recording to all our registrants next week, and the webinar will also be available on our website under webinars with a copy of the deck used today. Thank you for joining us for this week's webinar, and we look forward to seeing you again soon.
Thank you.
Thanks, everyone.